Hi, my name is Max from Easy Freight and Customs Brokers, and today you will learn how to get the best cargo insurance and 4 myths you have to ignore. We cover topics like situations when you may be getting the wrong type of insurance, 4 myths about freight and cargo insurance you have to ignore, and simple steps to check that you have done everything correctly. Obviously, feel free to type your questions down in the comments below and I will read every single one. If I miss something, please type it again because I have a lot of inquiries coming through during the live talk. If you want to learn other business tips, then make sure you subscribe to this show because we have different guests and different topics every single week.
Welcome to the show for business owners, proudly brought to you by easyfreight.co.nz.
While this information in the webinar is based on real life examples and practical and useful, we advise it's of general knowledge and you have to talk to a specialist because your situation is going to be different. And our team would be happy to help you and answer any questions, so feel free to contact us anytime. First of all, please type in the comments whether you import or export, just one word, import or export, so I get a general feeling of what you're interested in. Let's start with the first topic, and we talk about situations when you may be getting the wrong type of insurance. While for you may be getting one type of insurance and you would think it should cover everything. In the insurance world, the brokers and insurance companies, they've got different products for different situations. For example, if you've got a fragile type of cargo, then you should declare it as fragile and you have to make everyone aware that you've got a fragile type of goods. Because why you may have to pay a premium, a bit extra for fragile, because there is more risk, obviously. When you try to save money and use a different type of insurance for non-fragile goods, you may be getting your claim declined, because as most importers and exporters know, insurance is a business and they are, like everyone else, is trying to make a profit. Therefore, they will legally not obliged to pay you out if they see use the wrong type of cargo and the wrong type of insurance. So you have to double check. It's better to ask. It's free to ask the insurance broker, the customs broker or freight forwarder, is this the correct type of cover for your particular goods? Another thing to keep in mind that a freight forwarder or a customs broker, they have a lot of experience with insurance and different products. The manufacturer, the supplier, or the buyer of the goods is going to be the best person to know, is this fragile or is it a non-fragile goods? It's on the buyers to declare the right type of goods. The insurance company and a broker, a freight forwarder, they'd be happy to take your money and they will use your words, your declaration. But when there is a claim, which doesn't happen often, hopefully your goods arrive in a good condition. And in our situation, we don't have a lot of claims because we handle it properly from the beginning. But if there is an unfortunate situation and you have something that's been damaged and it's a big claim, say $10,000 or $20,000 or even $5,000, the insurance company, they may want to do an inspection and they will check, was it declared properly on the documents? And if it doesn't match, then you may lose the whole payout. If you want to save $50 or if it's just a genuine mistake, it's still your responsibility to make sure you use the correct type of insurance cover. We have a question. When do you think is the right time to arrange the insurance for import cargo? Thank you for the question. Obviously, the sooner the better. Most insurance companies nowadays require you to arrange the insurance before it leaves the supplier. And you also have to read the contract between you and your supplier. It will explain who is responsible for the goods at what point based on X works, shipping terms. Your responsibility becomes when it leaves the supplier's factory. So as soon as it leaves the factory, you have to have the insurance in place. And because it takes at least 1 or 2 days to arrange and discuss everything, we suggest to do the insurance at least 1 day before the dispatch, so you know the budget, you know how much it's gonna cost, and you have time to check the insurance policy. And I remind you, while an insurance broker or a freight forwarder or a customs broker, they will arrange the insurance for you. It is your responsibility to check the insurance policy. You have to read, if you want to be right, in many cases you have to double check and read that you've got the correct description of the goods. Then you have to check the correct insured amount, because some people could declare the wrong currency. It could be New Zealand dollars instead of pounds or instead of euros, and you will get less payout if there is an accident. So it's your responsibility to check all the documents in advance, and it's better to do before it leaves the factory. Feel free to type any other questions. Do I have to buy insurance if using a courier company to deliver my goods? It is a common misconception that you don't have to buy insurance if you use a transport company, whether it's a local company or an international company. While they do have an insurance cover, it is a limited cover, and it depends on the contract, it depends on the transport companies. For the argument's sake, you should keep in mind that the limit is for sea freight is around $500 per package. So whether it's a pallet, a carton, or a box, or a crate, whatever you declare on the transport document is gonna be your limit. So if you've got 2 items declared on the transport documents, then transporter limit $1,000, up to $1,000. Even though your value of the goods is $10,000, their limit is $1,000. And it depends on the company that you use. Different companies have different limitations. And for air freight, it's around $20 per kilo. So if it's $100 kilos, then the limit is 100 times 20, $2,000, if my math is correct. This is the case when insurance will help you, because you can increase the value of the insured amount. It has to be a market value. Say if the true value of your goods is $10,000, the limit of the courier company is $2,000, so you will get the payout of $10,000. You'll have a full cover. But you can't and you shouldn't declare more than the market value of your goods, because if you insure it for $20,000, some insurance companies may decline and pay you only the true value of the goods. So you're just paying too much. Thank you for the question. If you've got any other questions, feel free to type them now in the comments, and I will read every single one. If I miss anything, please type it again. If you enjoy this kind of information, please subscribe, and you will get the next one delivered to your inbox next week. Let's discuss another situation when you may be getting the wrong type of insurance. Some of our clients in the past imported vehicles. That could be a motorbike, could be a car. Anything that has an engine most likely will be classified as a vehicle. And some importers or exporters, they bought the wrong type of insurance because they declared it as general cargo or as fragile goods. And it's not correct, because the correct insurance type is a vehicle. And once again, when you've got an insurance claim, you may not get the payout, because the insurance premium is different for vehicles, and you have to complete a different set of documents for vehicles. It's important for you to ask the insurance broker. You can send them all your paperwork and double check, is it insured properly. We have another question. Can you please outline the documents and details required to issue the insurance certificate? The most common required documents are the commercial insurance, which will display the value of the goods. Another thing that you will have to provide to the insurance broker or freight forwarder is what are the shipping costs, because while the value of the goods could be $10,000, you have to add the shipping costs, say $1,000. And then on top of that, the best industry practice is to add another 10% to get the full cover and get a payout. So in total, based on these figures, the insurance amount will be around $12,000. Because if something happens and you completely lose your goods, you want to get your goods again, right? So you want to get the full cover door to door. You want to get the shipping payment as well, so you don't have to pay for the shipping again. Therefore, you have to add all costs from start to finish, including the value of your goods, to get the full benefit. If you are confused with the formula, one of our team members would be happy to do the calculations for you and we would offer several options, because in certain situations you can save money by getting an excess when you have to pay the first, say, $500 to the insurance, and then you get the difference back in your pocket. In these situations, the insurance company, they don't have to pay for small claims up to, say, $500, but they will help you with the bigger claims, and it's gonna depend on your risk appetite and if you want to save money. We have another question. How long does it take for the insurance company to pay out a claim? Are there any standard time limits, or will it depend on the terms of each particular contract? If it's a simple, straightforward claim and you've got all your documents done correctly in the first place, normally it takes about a week. If you don't have any issues with the insurance company, if your goods were packaged properly and the insurance company doesn't have any questions on top of just a standard set of documents, then normally if you use one of our insurance companies, they pay out within a week. It could take longer if you would have to do an investigation, and maybe if you have to send a surveyor somewhere to inspect one of your boats, vehicles. Obviously, if it's a major loss like a ship fire, something like this, it could take longer. But if it's a complete loss of your pallet and it's an obvious accident, then insurance companies normally pay out within a week. And if, well, mind you, that's if you use an insurance company based in New Zealand. If you use somewhere a company based overseas, you'd be lucky to get any money at all, because you don't know was it a true proper insurance company, and there could be a language barrier. Sometimes it would take a lot longer just because you don't have the local support. We have another question. The person is asking, am I insured for low value goods automatically, as you just explained with the courier doing door-to-door? What if there are a few companies involved in freighting, none of them admits damage done to my goods? How can I make them pay to their limits, or is a separately arranged insurance my only option in this case? Thank you for the question, and it's a tricky one. You put me on the spot, Alex. You obviously want to have an insurance. If you run a business and you want to have a peace of mind, you don't want to have any hassle, we always advise to have an insurance, because like in this situation, when you have a lot of people and a lot of companies involved, this is the last thing that you want to deal with. You don't want to chase different companies and then fight with them what's the correct limit and who is liable for what. If you have an insurance, you'll get a faster settlement and you will have better support. But if you don't have an insurance for one reason or another, yes, you'd have to read all the contracts of different transport companies and see what are their limitations, because whether you read the contract before, it doesn't mean that you didn't agree on it. Therefore, you'd have a lot of complex situations. Most companies are trying to do their best for you, and they will not automatically admit their liability. They will, obviously try to reduce their costs as well. And it's a case by case. You'd have to go through the documents. You'd have to see who signed for what. Do you have any proof? For example, did you take any photos when it was packaged at your supplier's factory overseas? Do you have another set of photos when they unloaded the container here in New Zealand? Can you prove what was the condition before and after? You have to be careful with these details, and one of our team members would be able to help you. During the import and export process, we go through the checklist and we ask all these details from different parties to make sure you have the proof and you don't have any problems like this. If you've just joined us, we are talking about how to get the best cargo insurance and 4 myths you have to ignore. If you've got any questions, feel free to type them now and we will read every single one. Let's move to the next topic, 4 common myths about cargo insurance. One situation that we come across a lot is that New Zealand companies, they rely on overseas supplier to arrange the insurance. In many situations, they will see free insurance included in the price of the goods, or it could be $10 or $20 or $50. While it may be the case, if you've had a long relationship with this company, it is an established overseas business and you've done your due diligence, you read their feedback testimonials, yes, that could be true, and you could get a free insurance or very low insurance price because they buy in volumes overseas. They've got very cheap money nowadays overseas. If you follow the news, overseas they print money like there is no tomorrow. Their interest rate could be sometimes 1% or 0%. It's not like 4% in New Zealand, so their money overseas are very cheap. But the problem is, if you use this supplier for the first time, then how do you know that their insurance is gonna meet your requirements? You have to check and read once again the terms and conditions. One of the best tips that I advise to all New Zealand companies is to check, does this insurance company have a local New Zealand agent? Do they have an office here? If they do, that's good, that's a bonus. The next step for you would be to take a copy of this insurance certificate and then contact the local insurance company and ask them, is this insurance legitimate? Has it been activated? And if the answer is yes, and you've got it in writing, then by all means, it's all should be fine and you shouldn't worry about it. But once again, it's your choice, and it's gonna depend on your risk appetite. Do you want to deal with overseas company or do you want to deal with a local insurance company? Another common myth is that it is expensive. For the argument's sake, you should allow at least 1% of the insured amount. So for example, if the value of your goods is $30,000, then at least allow, I think that would be $300 as the insured amount, as a premium. Yes, you can get it cheaper in New Zealand. In many cases, you can get it for even $200. If you ship it on a more regular basis, you can get it even more cheaper. So as I said, it depends on your personal situation. You have to talk to the insurance broker and you can negotiate. You can always get a better deal, but for the argument's sake, it's about 1%. Is it expensive? I don't think so. Because if you run a business and when you import something valued at $30,000, $300 doesn't sound like expensive to me. For the peace of mind, I think insurance should be treated not as something extra, but as a standard cost of doing business. It's like electricity. Yes, nobody likes to pay anything, but if you wanna run your business, I think you should have a proper insurance done. Another common myth is that you can do it later while the cargo is in transit. Yes, in some situations it is possible, especially last year it was easier to do. This year we see a lot of insurance companies, they start asking a lot more questions and they become very careful when they offer the insurance certificate. Nowadays you have to do the insurance a lot sooner. You have to do it before it leaves the factory, so you know that you are covered from start to finish. Let's move to another topic. Simple steps to check that you have done everything correctly. The best way to do it is not to rely on emails, because while the insurance broker or the insurance company, they can say, yes, it's been arranged, but unless you see an actual document, the insurance certificate, unless you see that, it's unlikely to be done and activated. So the simple way is to get a copy of the insurance certificate and then read with your instructions. Is the description of the goods the same as what you requested? Is the currency the same? And if everything matches with your instructions, then you've done everything correctly. If you've got any other questions, feel free to type them down in the comments below. One of our team members would be happy to assist with your insurance requirements. Feel free to contact us anytime. And make sure you subscribe to our channel, because next week we will discuss some mistakes that people make when they employ a customs broker or a freight forwarder, and I'm sure you'd find it useful. We have another question. Is there an insurance cover if my cargo gets delayed? Thank you for the question. Yes, the answer is yes. There are all sorts of insurances available to you. It may not relate to the cargo insurance, freight insurance, but there is business interruption insurance. And by all means, if you talk to the insurance broker, they'd be able to review your situation. For example, you miss a special occasion, if you miss a special expo, I'm pretty sure that you would be able to get a separate insurance cover for that and have a peace of mind. Thank you for your time. Thank you for your questions. Make sure you subscribe, because more good stuff coming soon. Thank you.